When you zoom out, Bitcoin is just retesting where it broke out from. That's it, guys. It's hardly a big deal. When we look at the RSI of Bitcoin, it's like the second most oversold it's been in this entire cycle. These are opportunities. When it gets this oversold, yes, it can chop around a bit at those lows, might even make a new low, might chop, rally, new low, which will then diverge on the RSI. But it's telling you 1 month from now, prices will start climbing for sure. They'll be higher than here. And then 2 months, 3 months, 4 months, we should have much higher prices.
The past week has been a roller coaster for crypto investors, with sharp price swings, massive liquidations, and extreme market volatility sending shockwaves through the space. Bitcoin plummeted, altcoins were heavily impacted, and over $1 billion in leveraged positions were liquidated in just a few days. Understandably, this has sparked fear among traders, raising questions like, is this the end of the bull market? Have we reached the peak? Some even argue that the rally is over, just as they did in previous cycles. But the reality is, there's nothing in this correction that suggests the bull market is finished. In fact, macro investor Raoul and other experts believe this is just a temporary pullback in what will be one of the most powerful crypto bull markets in history. When you zoom out and look at the bigger picture, everything is still on track for a massive rally in the coming month. In a recent update on his YouTube channel, Pal addressed the latest market turbulence, suggesting that the worst is behind us. He believes that Bitcoin and other cryptocurrencies will recover significantly in the coming week. Pal's optimism stems from his analysis of global liquidity and its impact on the crypto market. Unlike traditional financial markets, crypto doesn't rely on earnings or balance sheet. Its valuation is primarily influenced by the availability of excess liquidity in the financial system. When central banks print money, lower interest rates, or inject liquidity, that capital often flows into riskier assets, including Bitcoin, Ethereum, and altcoins. When liquidity is abundant, crypto prices rise. With abundant liquidity right now, Pal is 100% optimistic that this will become evident in the coming week.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Firstly, the chart that everybody knows about. This is the chart Julian and I came up with, global M2 in dollars with a 10-week lead over Bitcoin. Now, we were not sure whether it was going to follow this exactly because we had an identical setup in global M2 in 2017 in the last Trump cycle. And what happened is crypto collapsed 35% in a week and then slowly recovered with chop. I wasn't sure whether we were going to have the full sell-off to follow this pattern or we were going to go sideways over the period. We eventually went sideways first and then had the sell-off. Either way, it's on track exactly as global M2. What it's saying to you is that financial conditions that tightened last year due to the dollar rallying in anticipation of Trump and also rates going up in anticipation of tariffs, well, that is what's playing through now. Now, if you look at the chart going forward, that reverses. Yes, there's going to be a period of chop. We're going to be finding the lows around here, and I'll come more on that in a sec. Then there's a period of chop, and then we start coming back up the other side. So it's nothing to concern yourselves with. Volatility is part of the game. Without the volatility on the downside, you don't get the 150% returns or more on the upside. So anyway, calm down, have patience, let this play out. So financial conditions are kind of the big daddy of all of this. And the 3-month and 3-month rates of change of Bitcoin is driven by financial conditions, which leads by 3 months. So financial conditions obviously tightened because of the dollar and rates back in last year. Now, Bitcoin has fully priced that in. So we're at the price point that is right. Now, could it then chop around along the bottom until it starts mirroring the rally in financial conditions? Possibly. This is also obviously very similar to the global M2 chart because they're all highly correlated. I just want to show it to you in a different way. The next chart is what you're hearing a lot of noise about is there's an economic weakness coming. Economic data's coming out weak. Yes, it is. And it's been driven by the dollar last year. Again, there is a lead here, and the dollar strength last year is causing economic weakness. This is the reason everybody wants a weaker dollar. China wants a weaker dollar so they can stimulate. They're desperate to stimulate. The world has a lot of dollar debts. They need a weaker dollar to service those debts. The US needs a weaker dollar to export goods. The global economy needs a weaker dollar. But first, we're going to see that weakening of the US economy because of what happened last year in the dollar. And then things will start to change again and the economic cycle will pick up. Now, that probably also means that rates will come lower because economic data is weaker. So that's playing into our idea that financial conditions are going to ease over time. So it's yet building a more positive case. No, it's not going to be a recession. All of that talk is nonsense. Economic data will weaken for a bit and then strengthen. But this is all good for us. Yes, tech stocks are slightly worried about weaker growth. But again, when we can look forwards, using the analysis, we can see recovery is round the corner. Now, when we look at last time around in 2017, when Trump came in, we saw a very similar thing. Economic surprises fell off a cliff because the dollar had strengthened in anticipation of Trump coming into office. That then eventually reversed and the economic cycle picked up massively and the dollar weakened hugely. And that drove what was a very large crypto and risk cycle, even though the Fed were raising rates. You see, global financial conditions are the key thing here. And that could be driven by the US, or it could be driven by China, or it could be driven by Europe. It could be any of these economic powers, or it could be all of them. So as the dollar weakens, we're already seeing that mechanisms like dollar yen are starting to move a lot more. Now, dollar yen is incredibly important because the Japanese banking system is the heart of the Eurodollar system. They're the ones who lend out dollars into the global economy, and that finds itself its backdoor into China that allows China to service its dollar debts. And if the dollar is weaker, it can then stimulate more aggressively. It needs to do trillions of dollars of QE to service the bankrupt real estate sector and other parts of the non-performing loan sector. So anyway, that's all to come. If we look at the dollar now versus then, very similar. Trump back then said the dollar is too strong. They've already talked about it, him and Scott Bessent. They've already talked about the long end of rates. What they want is the dollar to, first they will use the dollar as a bargaining tool with the Chinese, the Europeans, the Canadians, the Mexicans to get the tariffs in place. In exchange, they will give a weaker dollar. That helps everybody out. We could all then move forwards with the global economy, and the global economy should be strong. The back end of rates, which is like 10-year rates and stuff, well, that's going to help you guys too, because your mortgages will come down and borrowings for corporations will come down. And that gives everybody more money and that stimulates economic growth. This is all to come. They've made it very clear that that's what they want to do. Global M2 back in 2017, exactly following this cycle. Same kind of administration with the same tariff policies. Dollar reacted the same. The markets reacted the same. So again, don't expect these to be perfection, but expect this to start playing out again. If this is the case, then M2 is going to keep going up all year. If that is the case, then crypto and risk assets like tech will do well all year. Again, don't expect perfection. It won't be exact, but it'll be close enough. I don't see any reason why that won't be the case. And anybody telling you otherwise is just plucking stories. We do the analysis, lots and lots of it. We have hundreds upon hundreds, maybe thousands of charts on all of this.
Raoul Pal has identified a significant correlation between the global M2 money supply, a key measure of global liquidity, and Bitcoin's price movement. His research shows that changes in the global M2 money supply tend to precede corresponding shifts in Bitcoin's price by about 10 weeks. This suggests that when global liquidity increases, Bitcoin's price generally rises around 2 to 2.5 months later, and vice versa. By November 2024, Pal observed that Bitcoin had entered a parabolic phase in its market cycle, driven by shifts in the global M2 money supply. His models predicted that Bitcoin could reach a local peak of over $110,000 by January 2025, followed by a correction below $70,000. This scenario unfolded exactly as expected, which is one of the main reasons Pal isn't concerned about the ongoing correction. In his latest update, the former Goldman Sachs executive explains why he believes the correction has run its course and that Bitcoin prices should start recovering significantly in the coming days. Check out more clips from the video for further insight.
Is global M2 it kind of consolidates for periods of time. Those periods of time tend to be crypto winter and then crypto spring. As we start transitioning into summer, you get this breakout in M2 and then a retest. We've had the breakout and retest, and what happens is after that retest, that tends to be phase one correction of the banana zone. We started the banana zone in September, October, November. Then we start correcting. We continue to correct, and then we take off again. That's all to play for. It's very normal. It's playing out like a very typical cycle. The other thing that drives all of this is the business cycle. See, the business cycle is driven by financial conditions, liquidity, all of those things. But this is how businesses do when financial conditions get easier. The ISM survey above 50 shows the economy is starting to grow. Now, economic growth has been strong, but that's been driven by the government sector. But again, Trump and Besant have said they really want the private sector to take over. So what they're telling you is they want the ISM to go up. They want the private sector to start expanding, regular businesses. And regular businesses expanding also drive Bitcoin. So Bitcoin goes up as the ISM goes up. So this kind of rate of change of Bitcoin will give us much higher prices if the ISM gets up to its normal cycle peak of somewhere between 56 and 65. And that will give us the magnitude of the rise in Bitcoin. We don't yet have a full handle on how high the ISM will go this cycle. But if it goes above 60, I mean, those are high prices in Bitcoin. That's above 300,000, maybe even higher. Now, again, I don't use forecasts because you guys don't deserve them, because you use them against me and say, well, you predicted that. I'm not predicting. What we're trying to do is give you contextualization of how the market can evolve so you can play along from home. Rising ISM will be good for your bags. And rising ISM it may still be choppy because we're still coming through. We need rates to go lower. But as that happens, we will see this pick up. Forward-looking indicators of ISM, like ISM new orders, less inventories, leads by 3 months. It's going up very sharply. Again, expect it to be choppy, but it's telling us ISM should be going up. So that's good for Bitcoin in the future. 3 months' time, Bitcoin should be much higher. Okay, great. It's starting to get this now. The ISM also says, well, when that starts coming above 50, what happens is altcoins tend to outperform. Now, there's all this bullshit online. There's going to be no altcoin season. It's never going to happen. It's only a Bitcoin only season. It's all about the ETFs, blah, 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 blah. Simply, probably not true. Again, we deal in a world of probabilities and no certainties, but probabilistically speaking, as the business cycle accelerates, people go further out the risk curve because they have more money. You're earning more money. Your mortgage has gone down. You have higher savings. You can recycle them into assets. It happens at corporate level too, as corporate earnings go up and the overvaluation that people are scared about of the stock market. Well, that all becomes noise as well because earnings expand. And then those earnings get recycled into investments and the market goes higher. So altcoins should outperform in the next phase once we get out of this corrective phase. Okay, let's look at these corrective phases. If you guys have got this far and followed me, we've gone through 1, 2, 3, 4, 5, 6, 7 20% plus pullbacks. And you can't remember those. You might remember the last summer one because that was pretty miserable, but that's it. We deal with this. The volatility is a feature, not a bug. You need the volatility to drive these massive rips when they come. So that's where we are. We've seen this. We should be somewhere close to bottoming. Now, with those 7 pullbacks, we've still had 600% returns from the low. Again, you've forgotten about those because you're like, oh my God, it got to 110 and now it's at 80. It's like, it's all noise, kids. Really, honestly. When we go back to 2017, it was more violent because Bitcoin was earlier in its adoption phase and we had 1, 2, 3, 4, 5 30% plus pullbacks, some of them at 40%. So this is more like Solana now, which is more volatile because it's earlier in the cycle.
As Raoul Pal's analysis shows, global liquidity remains the driving force behind Bitcoin and the crypto market. His global M2 model has consistently predicted past price movements, and according to his latest insights, we're still in the early stages of a massive bull run. While short-term volatility can shake out weak hands, the broader macroeconomic forces suggest that higher prices are just around the corner. The data is clear. Every major bull cycle has had its pullbacks, but these corrections are simply opportunities for savvy investors to accumulate before the next big move. The worst of the recent market turbulence appears to be behind us, and based on Powell's projections, we could see significant recoveries and new highs for Bitcoin and altcoins in the coming weeks and months. If you've been feeling uncertain about the market, now is the time to zoom out and consider the bigger picture. Smart money isn't panicking, they're positioning themselves for the next move. With rising global liquidity, increasing institutional adoption, and historical trends on our side, a continued bull market seems likely. If you found this analysis helpful, be sure to hit the like button to support the channel and share this valuable information. Don't forget to subscribe and turn on post notifications so you never miss an important market update. Drop your thoughts in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.